All right, so the Bureau of Labor Statistics just released CPI data for the month of August, and while things are getting better, they're not improving as fast as economists and many people were expecting. So right now what we're seeing is that U.S. inflation came in at 8.3% year over year, which is down from 8.5% in the month prior. If you look at the charts, we could see that over the last few months, we have seen inflation consistently drop. It had reached a high of 9.1% in June 2022 before dropping to 8.5% in July. Now it is down to 8.3%. But the key thing here and why we're seeing markets react negatively, why we're seeing the stock market and crypto fall, is that many economists had expected this number to come in not at 8.3%, but rather at 8%. And when we look at a little bit deeper at the data, we can see why this has happened. When we look at the data, we could see that the biggest drops month over month were from gasoline and from energy costs altogether. You could see that energy overall was down 5% month over month, but gasoline was down 10.6% month over month. And this is what helped this whole entire report, because if we're looking at this excluding energy, and if we're looking at really just what happened with food, we could see that overall all these items for food saw an increase of 0.8% month over month. In addition to this, when we start looking at other items, we can see that all items less energy and food still increased at 0.6% month over month, which was a big increase compared to the month before. So really, when we're looking at this report, yes, inflation has started to come back down. We are seeing that what the Federal Reserve has done is starting to work, but really it is just beginning to work, because all we have seen is energy come down. We see gasoline come down, but every other number is still up. If you look at this report, the only negative numbers month over month were gasoline, energy commodities, and energy as a whole, as well as fuel and oil. But other than that, every other number was in the green. And that is why we're seeing markets fall. The good news here is that we know moving forward that we're going to expect to see a 75 basis point rate hike from the Federal Reserve at their upcoming meeting at September 20th and September 21st. Right now, it's a 90% chance that we will see the Federal Reserve increase rates by 75 basis points. The bad news is that because inflation has not come down as much as economists were anticipating and as much as people wanted, we're probably going to see the Federal Reserve continue this very aggressive approach to combating inflation, meaning that not only in this month could we see a 75 basis point increase, but also in the next meeting and the meeting after that. So right now we need to keep an eye out on that. Personally, I think this was actually a pretty positive report, because while we did see an increase in some numbers for a month over month, overall we did see a decrease. We saw it drop from 8.5% down to 8.3%, and this was despite most aspects of the report showing a slight increase. So that means that it's starting to work what the Federal Reserve is doing, and it might not be decreasing as fast as people wanted, but we are seeing a decrease. And I'd rather see a consistent decrease every single month rather than see a big drop in August, then a rise in September for inflation, then another drop in the month following. I'd rather see a consistent decrease in inflation across the board rather than seeing these big swings where one month we see a drop, the next month we see a gain. I'd rather see what we're seeing right now. So let me know your thoughts on inflation. Do you think this is going to ultimately be good for the markets, bad for the markets? And what do you think it's going to make the Federal Reserve do in their upcoming meeting? But I hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.